George Suri's Mortgage Broker here, June 2023 finance update. So right now I'm in Port Douglas. What am I doing in Port Douglas? I am here to see referrers. So basically, as you probably are all aware, I have clients all around Australia, which means I can have referrers all around Australia. So I'm meeting up with people here in Cairns, the Cairns area, just trying to increase my referrers. If you know anyone that's an accountant that you get along well with, that is looking for a mortgage broking referral partner, you can always pass on my details to them. Real estate agents the same, financial planners the same. Though I've got a couple of good financial planner referral partners at the moment. So anyway, so what's happening in the market? My business, I can tell you, it's quiet. It's very quiet. It's very hard to get people loans at the moment. As you know, the interest rates are going up so much, which gives me the opportunity to work on the business rather than in the business. So that's what I'm doing at the moment. But a couple of really interesting things that are going on. So one thing is that I'll put up a graph here. Equifax. Equifax are the ones that give you a credit score. They have insight into everyone's loans. They know who's defaulting, who's missing a payment here, who's missing a payment there. I recently listened to a talk from them, and it turns out, so there's secured credit and there's unsecured credit. So secured credit is, say, a home loan, it's secured by the house, or a car loan secured by the car. Unsecured credit are things like credit cards, they're secured by nothing. Personal loans that are secured by nothing. Basically, what they've found is that while secured credit is decreasing at the moment, less people are applying for secured credit, unsecured credit is booming, which is actually not surprising because this is what happens, right? It's tough at the moment for a lot of people. We know the cost of living crisis. What do people do? They generally go, rightio, we need to survive for the next few months. Let's take out a credit card. Let's live off a credit card. Let's get a personal loan to get by and try and get through this period. Now, what they're also finding is that unsecured credit arrears are rising. So the secured credit arrears aren't rising that much, the unsecured credit are. And there's a reason for that too. If you think about it, if you're going to default on something, normally you default on your credit card before you default on your home loan, right? So that's normally the hierarchy. You start off with these little things, and also credit cards normally have higher interest rates, so they're easier to default on. But people always fight to save their mortgage. That's just the natural tendency for us. So what has Equifax found? They found that over 6 months, generally what happens is, after this unsecured credit arrears, 6 months later is when people start to default on their home loans. So I find that very interesting. It could be, a bit of an indicator of what may come in the months to come. You'll see it also in the newsletter about the fixed rate cliff. You've probably heard enough about that. I won't talk too much about it. A lot of people are coming off fixed and they're going on to variable. They're coming off these low rates. They're going to these much higher rates. Now, just like with the unsecured credit to the secured credit, it takes a number of months for that effect to really take place. So that might be something to entertain at the end of the year, looking at how things are going there with that. Another thing that happened in the news only yesterday was that the inflation rate has come down quite a bit. It's come down, I think it was from 6.8 to 5.8. I'm not sure on that. I'll fix it up if it's not correct. But it's come down lower than what they thought it would be, which is a good sign because the RBA is trying to get it down to the inflation rate of between 2 and 3%. That's their target range. So that's good news. We'll see what happens with the next rate decision, which will be in not very long at all, be like a week's time. We'll see what happens there, because will they pause? Will they not pause? I never make predictions. I was right in my head. I make predictions. I was right the last 2 times. I've got a prediction on what will happen this time. I never voice it, and the reason why I never voice it to my clients is because I do not believe that we should be trying to predict interest rates. I don't believe that's the right focus. I think the focus is Focus on your own situation. I've said this a million times, I know, but focus on your own situation, what you can afford, and going with that rather than trying to, read the minds of the RBA governor. So look, forget about that. Though, of course, I know it does hurt people that have variable loans, so you will want to know the outcome of that, and I will email you all. So that's mostly what's happening here in June for the finance update. And of course, there's a few other things that I've got in the email newsletter, but that's the gist of it. I'll talk to you all soon. Any questions, reach out to me. Thank you.